Hello, thank you all for joining today's webinar on Beyond Bitcoin ETFs, Expanding the Crypto Investing Universe. I'm Rohan, I'm going to be your host. Along with me, I have Ram from our wealth team. Today, we're going to be talking about the different types of ETFs that are out there beyond Bitcoin. We're going to talk a little bit about what is crypto, why crypto, started booming as of recently, why Bitcoin took off, and then we'll just share a few resources towards the end where you can make an informed decision when it comes to buying crypto ETFs. To begin, uh, I'll just start off with the most important slide, and that's the disclaimer. So today's webinar is going to be a purely educational webinar. We're not going to be talking too many technical things and do not use our webinar as an investment advice. And because crypto markets are highly volatile, please do your own research and consult with a financial professional before making an investment decision. These are the topics that we'll be covering today. Crypto fundamentals, Bitcoin's rise to prominence, Bitcoin's ETF revolution, the ETF explosion, the complete crypto universe. And in that, we're going to talk about the six different types of crypto ETFs available. What is cryptocurrency? I'll just hand it over to Ram. Ram, you can take us over.
Thanks, Ron. Hello, everyone. Good evening. Thanks for joining our webinar. So let's try to simplify this down, right? So crypto investments, Bitcoin might sound scary sometimes confusing. But let me tell you something. It's actually really cool and a very different kind of investment, or I would say a different asset class altogether itself, where you can have a more diversification exposure towards your portfolio, right? So we are we'll try to learn this, what crypto is, why people love Bitcoin, and and how adults invest in it, right? Using something we called as ETFs, right? Which are, like, I would say, like a safe box that hold crypto for you, right? um, when it comes to cryptocurrency, getting down to basics, right? So cryptocurrency is nothing but it's like a digital money that lives on the internet. So you can't touch it, you can't no one personally controls this cryptocurrency, right? But everything is recorded in an online, I would say it's like an online notebook, and this notebook we call it as blockchain, right? And everyone can see what's written, and it's very safe and honest kind, type of investment, right? So what can crypto do, right? So crypto helps you to do a lot of cool things, right? You can send money to anyone in the world in seconds. You can buy things in the digital world. It acts like a form of a digital gold, right? It helps run games, apps, and online tools, you know. And the most important thing is that it doesn't need banks. People can send money directly to each other. It's like someone, you know um, your it's like your toy, need without needing a teacher in between, right?
Uh, just to add, wait, wait, sorry. Just to add to what Ram was talking about, the reason why cryptocurrency is actually uh, booming right now is that cryptocurrency is secured by by mathematics and not by banks or government. And because of this, it's like shot up because of decentralization of the currency. And the next part is the real world applications, right? So because of cryptocurrency having a decentralized access, it's much easier for a person to send money internationally without banks or having intermediary fees. And it's a faster settlement process compared to your traditional wire transfers. And because of it, you're able to have a value like a digital gold concept of holding a coin over a period of time, right? And because it's in fixed supply, sorry. because it's in a fixed supply, it's able to be protected against inflation. And cryptocurrency is the foundation for DeFi. What is DeFi? DeFi is nothing but decentralized finance. It's a topic that we'll be talking a little bit later on in the webinar, but we'll be covering the type of details that you're able to invest in the DeFi ecosystem. And because of cryptocurrency, cross-border transactions happen much faster. So direct peer-to-peer without intermediaries, like I explained earlier. And the biggest thing is the key to innovation. You don't need to trust the bank, you just need to trust the math. That's what Wall Street's all talking about. That's the reason why people have put in a lot of money into cryptocurrencies. We'll talk about the value in the next slide. Ram, you can take over from here. So
So looking at the why Bitcoin became the gateway. Let's try to understand where it all began, right? So it's like it's not just started yesterday, right? So the early emergence of Bitcoin started in 2009, right? So this is not something new. The term might sound new because you are hearing it for the first time, but actually the term was not recently created. It was created in 2009, when the world was having big money problems, just like your 2008 financial crisis. It's like a hero appearing, just when the city needs a saving, right? So most this was most popular among the tech people because of the blockchain uh, technology that was used to create this, right? But then again in 2017 something crazy happened, right? The Bitcoin prices started exploding, right? The popularity of the Bitcoins became more famous, and it became more attractive, and it became one of the dominant asset classes, right? Um, even right now, if you look at the current Bitcoin or the crypto market as a whole, even the companies, the corporates are buying Bitcoins as a form of their investments, right? The major companies, if you see MicroStrategy, if you see Tesla, they hold Bitcoins as a form of an investments, right? Thinking that it can add value to their overall positions, right?
one second. One second. Please mute your mic. Hi all, we're just facing few technical issues. We're like trying to figure out why people aren't able to join. Just give us 2 minutes in this. We'll just be able to resume the webinar. Okay. I think we're good. Ram, you can just start. There is some issue with Zoom. Okay, 1 second. Yeah, can start.
Yeah, sorry for that. So, why Bitcoin dominates, right? So, Bitcoin continues to dominate for, I would say, several, reasons. First is it was the first and foremost original form of cryptocurrency, right? That first mover advantage is extremely powerful, right? The next, it was the largest and most secure network operated by thousands of Bitcoin miners, right, globally. It also has a track record of 16 years with no downtime as such, right? The fixed supply of 21 million coin creates a strong scarcity also, right? And most importantly, Bitcoin has the strongest brand in the entire crypto space, right? When people think of crypto, you think of Bitcoin, right? This combination of technology and global recognition is why Bitcoin is still represents nearly half of the entire crypto market. If you see, about 48% of the market is dominated by Bitcoin, followed by 18% is Ethereum, which is still in its emerging stages in the crypto space, right? Then you have other cryptocurrency form of cryptocurrencies which form about 34% of the overall market, right? So the strongest is that Bitcoin, obviously, because of this first mover advantage, and it is you people most of the people is consider Bitcoin as a different form of gold itself, right? So that's what makes this space very attractive. And you many of the investors want this piece of investment, the asset class in their portfolios. Thanks. So we'll get to the most interesting part of this, crypto space when it comes to especially investors from India, right? So if you have a direct exposure in any form of cryptocurrencies, you are made to pay a enormous amount of taxes, right? But we have something more regulated, more tax friendly product, right? Which is our ETFs, which is very popular when it comes to the US market, right? We have something called as the Bitcoin ETF, right? Which have a direct exposure towards your Bitcoin, right? If you see how popular this is, total inflows has been 35.6 billion in the last 22 months, right? Average daily volumes is more than 2 to 4 billion per day, right? There are spot bitcoins also, right? And largest fund is IBIT by far, which holds around 15.5 billion AUM. This is again managed by BlackRock, one of the largest fund manager in the entire world, right? So again, why this ETFs is more attractive, right? The ease of access. It's more liquid, right? You can buy and sell very easily, right? The Bitcoin ETFs. And taxes, it is, since it is a ETF and exchange traded, right? It's regularly traded. It is still considered as your normal securities. So you don't pay like 30-40% amount of taxes for this, because it's just an ETF, right? And again, it is regulatory comfort. SEC has the oversight and investor protection, right? So even if you invest in the ETFs through our platform, it is again SEC regulated, so it's completely legal. And you don't need to pay enormous amount of taxes, right? And again, it is adopted by institutions. So these factors make these Bitcoin ETFs very attractive for the investors to, which you should have in your portfolio as a percentage of, as a minimal percentage. So beyond Bitcoin, right, to expand in the crypto universe, right? So uh, once,
Uh, so, so when we talk about the market evolution, the slides before this, we were talking about the history of how the cryptocurrency came into figure. So I'll just start off as the most recent timeline is 2024 is when Bitcoin ETFs got approval, right? And once the Bitcoin ETFs approval happened, a lot of investors in the US and worldwide started pouring money into this. And that's why the number came 35.6 billion in inflows. And fast forward to that in July 2024, Ethereum ETFs got approved and 2.5 billion inflows happened in that. Solana is a type of ETF that we'll explain later on in the webinar, but it's a type of ETF that's used for mostly for the bank side. The spending and after that, various thematic ETFs launched. Fast forward to 2025, we have seen like huge staggering numbers of inflows into ETFs, and because of this, the crypto ecosystem isn't just Bitcoin. It's an entire universe of blockchain applications and use cases. And now these are being given to you as an investor in a form of an ETF. Rather than a traditional, you need to open a crypto wallet and then buy it through that. With ETFs, it's become very easy and you're able to buy it directly in your US investing account. So, next one, blockchains, right? We are just trying to break down the type of blockchains available, like largely, right? Bitcoin is basically the store of value, is basically for payments. Ethereum is used for smarter contracts, uh, decentralized finance and NFTs. NFTs are nothing but non-fungible tokens. I'm pretty sure all of us would have at least heard of stories of people buying few years back digital artwork. Think of them like that. People were buying digital artwork in a form of NFTs, non-fungible tokens. And next we have Solana. Solana is mostly used for high-speed, low-cost transfers. And the last one is Cardano. It's a research-driven blockchain. It's mostly used for mining. It's mostly used for research and for the blockchain development. Lastly, we have the categories that are being, used by the cryptocurrencies. You have decentralized finance. You have NFTs, like I mentioned. Gaming is also a huge part of crypto. And then you have mining, right? Mining and infrastructure, and then payments. Lastly, we have payments. Now we're getting to the practical part of crypto ETF. And with around 39 products available in the US market and 92 more ETFs that are, being reviewed by the SEC and awaiting approval for them to be deployed in the market. But most of these 92 products available, 39 products available today, they all fit into six major categories. And some of these categories include direct crypto exposure, which is your famous IBIT ETFs or like your Ethereum ETFs. Then you have your crypto infrastructure and mining. Basically, these are mining ETFs. The next one we have is risk managed strategies, income generating ETFs, thematic exposure, and leverage and inverse. I'll be walking you through each one of them briefly. Direct exposure ETFs, right? These are straightforward. You own Bitcoin, Ethereum, or a mix of cryptocurrencies. ETF takes the assets, tracks its price, and you get exposure. No complexity, no leverage, just pure options. Sorry, just pure crypto price. Uh, and some of the key differences is why has 35.6 billion gone into uh, Bitcoin and not into ETFs like Ethereum, like just to talk about that, Ethereum is more complex than Bitcoin, and investors understand digital gold, quote unquote, as a Bitcoin, Ethereum. And that's one of the reasons why people have spent a lot more money in Bitcoin and not into Ethereum because it's one of the early adoption and it was the first in the industry, right? That's the reason why people get into Bitcoin rather than Ethereum or any other forms of ETFs. Next one we have is infrastructure and mining ETFs. Now, this is where things get a little interesting, from regular Bitcoin ETFs. Uh, while, for example, right, let's just say a Bitcoin ETF is giving you a 50% return uh, in the last 1 year. These will give you a little bit more. And the reason is, I would like to use the analogy of the pick and shovel. For example, in California gold rush season, right? During the gold rush, miners searched for gold, but the people who got rich were the ones selling shovels, picks, and mining equipment because every miner needed equipment at that point of time. And today it's the same, every Bitcoin transaction requires a miner to mine coin, right? And miners need infrastructure, for example, data centers, electricity, and other equipment as well, right? And infrastructure providers have recurring revenue. And because of this, we have a diversified income because of multi-clientele. Once leverage effect comes into picture. To give you perspective, right? Let's just say Bitcoin rises by 10%. Miners, because of Bitcoin rising by 10%, miners make a little bit more money. Miners' equipment cost stays the same. So does the electricity cost and the equipment cost. But the mining profitability can increase by 20 to 40%. So that's the beta I was talking about. And that the so-called effect is called a beta amplification. Mining companies give you a 3 to 4x beta to Bitcoin. And the leverage built into the business model. That is why this type of ETFs are becoming really popular. Now, some of the ETFs that you're seeing on screen, right, you might not see it on our platform. And the reason is uh, it's they are quite new, and our broker partner needs to need some time to review it. So, for example, if you find an ETF in this on this slide and you would like to invest in any of these ETFs, and if you can find on our platform, you can just send us an email on customer success, and we can reach out to broker partner and we can try to enable that ETF for you to invest in. Moving on, risk managed strategies. So these are crypto exposure ETFs with a downside protection. So previous two categories we spoke about, direct exposure into crypto, and the last one we spoke about the infrastructure ETFs, right? But what if you want to invest in crypto, but you also want to sleep soundly at night, thinking that, oh, what if the market crashes tonight? All my money in crypto is gone, right? And this is where risk managed strategies come in. So these ETFs use algorithms or structured products to reduce downside while maintaining an upside participation, right? And some of the strategies that they use are broadly defined into two major types. So these are the two major ETFs. BITC is an ETF that you are able to buy on our platform. So CBOJ. Uh, the cool thing about BITC is its algorithm switches between Bitcoin and US Treasuries based on market conditions. So when Bitcoin is doing up, it's having a participation in the Bitcoin futures. While if Bitcoin is falling, it's going to shift towards treasuries. And CBOJ is basically a very new fund that's just launched in January 2025. So you own Bitcoin with the upside participation and you buy put options like insurance against falls on this ETF. So this guarantees you your maximum protection and you're able to participate when the market is high on crypto. Next ETF that we're going to cover is income generating crypto ETFs. It's quite straightforward. It's like an ETF where you invest in and you're able to get dividends out of it. How it works is it holds Bitcoin exposure, has a sell call option against positions that the distributor or the AMC who is operating the fund does, collects premiums from option sales, and distribute income to shareholders monthly or weekly. And this is also a really good ETF for people who are actually having a dividend focused portfolio. It's getting highly popular in the US. People are, in fact, looking at these type of ETFs, to have cyclical inflows of money when markets are not doing good. Crypto is usually very independent of the US market. And yeah, the next ETF we're going to talk about is one of my favorite categories is the thematic crypto exposure. So, so this uh, this sector basically focuses not on just mining infrastructure or just pure crypto. It basically combines both and it gives you a blend. So basically, it also has, for example, direct exposure into Ethereum, or it can have companies working into blockchain. It can have exposure into infrastructure. It's like a mix of everything. It has uh, block, for example, some of the leading holdings, for example, can be Ethereum, Chainlink, Uniswap, Aave, and other this thing, other companies. One of my favorite ETFs in this category, which has not been mentioned here, is the STCE. It's a thematic crypto exposure ETF, and it did quite well as of late until crypto fell a few weeks back. And it's a good ETF for you to look into also in exploring. The last category we have today is your leveraged ETFs in crypto. So, as the name suggests, right, you are able to basically have 2x or 3x your investment in crypto, in basically in Bitcoin. It works exactly the same as how it would with a stock as well. And Ram can talk a little bit more on this. Ram?
So yeah, leveraged ETF and and inverse ETFs are it might sound complicated, but it's very simple, right? For example, 2x leveraged ETF, right, aims to deliver twice the returns of what the daily movement of Bitcoin is. For example, if it is mentioned as long ETF, it will capture the movement of any asset class. Now, for example, 2x long Bitcoin, it means that if Bitcoin moves up 2%, right, your 2x long Bitcoin will, go up by 4%. So that's the long Bitcoin, how it is positioned, right? Inverse ETF moves in the opposite direction. So now let's say if the Bitcoin goes up, inverse Bitcoin will give you a negative return, right? Now, if the Bitcoin goes down, your inverse Bitcoin will go up, right? So it is the opposite version of your normal leverage ETFs. So that's the main difference between long and inverse ETFs, right? You can also call it as a short ETF also, right? So this is mainly to hedge against the asset classes on a daily basis or a weekly basis, right? Again, when it comes to actual weight, this is a balanced dual exposure between Bitcoin and Ethereum, right? So these are some of the leveraged tools that you can look for.
To just add to the last point, right, the leverage is basically reset on a daily basis. This is not meant for longer term trading. Uh, the reason is because the leverage resets on a daily basis, and because of it, it creates a decay in volatile markets. That's one of the reasons. And these are ETFs not meant for most traders. It's meant for seasoned professionals trade on a daily basis or a weekly basis where you're trading, right? It's meant for them. You're not meant to hold this for longer term. You'll be impacted negatively if you hold for a long period of time. So what's coming next? So 2026 marks a huge expansion into different themes. For example, multi-asset strategies, right? So following GDLC's success, so there's going to be more diversified funds. There's going to be sector-specific allocation ETFs. and there's going to be geographic exposure funds into crypto. And then this is something that is more beneficial in the market where you can do options trading is you can have covered call product expanding and call strategies, spread strategies are happening, enhanced yield mechanisms, and lastly is technology convergence. AI plus mining ETFs are going to be coming in the next year. They are planned to release. So as Cardano ETFs as well. They are planned to release next year. We're also having a lot of integrations into of finance and onto other platforms as well. And there's going to be layer two scaling solutions. So initially, when spoke about layer one, right, you have your Bitcoin, you have your Ethereum, you have your Solano, Cardano. There's going to be the next layer of it as well. So it's going to branch off from there. And a few tools that we like to, look at when it comes to investing in the US market, and we find it useful, like to screen stocks and ETFs, is these three websites, ETF.com, and Morningstar.com is basically a very useful website if you want to get like ratings on whether to buy this ETF or not. That includes also a paid subscription in that. ETF.com is completely free. And the last link is ETFDB.com. It's like the holy grail for knowing anything about ETFs. And it's something that we bottlers use extensively, like just to talk about stocks or screen stocks. It has like a very powerful filter and a lot of good screening tools. It's a completely free tool, and you're able to get into a lot of details about the ETF. For example, postings, dividends, when was the last dividend paid, what is the rating of it, and all those things you're able to find in etfdb.com. This is where we can, take questions. Just bear in mind that we're not going to answer anything too technical. We'll keep it purely on educational front. So if you have any questions, feel free to ask and we'll answer them. Hi, Mr. Pillai.
Yeah.
You can
Hi, can you hear me?
speak your question.
Can you hear me?
Yeah, I can hear you.
Yeah, hi. Thanks for the presentation. A quick question. You mentioned that these ETFs are relatively less complex from a tax point of view, right?
Yes,
Is it true even in India? Would
yes,
they be treated as traditional stock assets
yes,
for from a LTCG, STCG perspective,
yes.
or they will?
So your long-term capital gains on these ETFs would be the same as in any other equity ETF. That's 12.5%.
Okay. One more question, and then I promise to shut up. Given the fact that, I mean, there's a lot of talk about interest rates not going to drop next month and all that, and some are betting that it will drop. There is a direct correlation between these cryptos, from what I've understood. Okay, help me correct my impression if it is wrong. There's a seems to be a direct correlation between when the interest rates go up versus when the prices of crypto go up and so on. So, do you see this becoming a highly volatile kind of asset that we would end up holding if we were to invest in these ETFs? Or would there be a certain cushioning effect on this?
There would certainly not be a cushioning effect, and the reason is because of the underlying asset, right? Crypto is volatile. I remember a few weeks back buying, STC because the markets were doing good, and I'm not someone who just looks at crypto. I also look at the other players in the market. I was looking at a lot of blockchain companies that were doing really well, in the past few months, because Trump came in and, because of a lot of AI growth also happening and a lot of these NVIDIA chips that have been releasing, right? Most of these companies use it for mining as well. And this whole ecosystem was actually thriving until a week ago, until it just fell. So you can just imagine like how volatile the market is. And I'm not just talking about cryptocurrency, I'm also talking about the companies that were building infrastructure and the tools around it, right? And because of that, the thematic ETFs also fell. But it's also a good time for people to also look into entering, but know that the risk is there. So I would say if you are really looking to invest, you should just invest in like short bursts of time, like buy low and sell high, and not look at holding for an extended periods of time until you're really convinced, like, okay, we're going to see a huge gain in the pricing of crypto. To answer your second question on the correlation with the interest rate, I think what we are seeing right now is maybe we let me just say this again. Since Bitcoin came in 2008 till so far, we have enough data, right, to see that interest rates not directly affect crypto pricing. Maybe what we are seeing is maybe like a mirage effect, maybe it's just fluke or something like that, luck where things are just coinciding with each other. Take this for example, right? Markets are going up, gold prices are going up as well. So a lot of things are happening at an anomaly today. That's what I would say. I think Ram would have another opinion. Ram, over to you.
No, I mean, I don't think so. Maybe I feel that it's maybe a coincidence, right? Because even regardless of interest rate coming down or staying the same, we would all still agree to the fact that Bitcoin is volatile. It's not like your regular asset class, right? So there is, again, just like you mentioned, Mr. Pillai, there is no cushioning effect on this. So that's why the exposure towards this can be very, very minute amount, right? So that would work.
Thank you.
Um, which experts which experts influencers would you recommend following for gaining deeper understanding of crypto? I'm not really sure, like, if you should really be looking at influencers because opinions can be biased. I would recommend just following up on news around blockchain technology and infrastructure technology to have a better understanding rather than just looking at crypto pricing. Uh, that would be my opinion. I'm not sure about any influencers that I can recommend to you as well. I certainly do not follow any, so I don't think I can recommend. Any other questions? And also I would just want to apologize, like there was a certain issue with the link as well. I hope that's been resolved. In case if you have joined late and you've missed the starting part of the webinar, the recording will be given to you. And if you have any questions post the webinar as well, please feel free to email. I'll just to the last slide. You can reach out to customer success at stockl.com or you can send an email to me. I'm Rohan. My email ID is rohan@stockl.com and we'll help answer your questions. If there's any other questions, please feel free to ask. We'll help answer them. Hi Arun, I see your question there. Where can I find a complete list of crypto ETFs that we can invest in Stockle today? It's a list that we can share with you after this webinar. You just need to give us a time. We'll probably send out the email by tomorrow once we compile the list. We have a list of crypto ETFs that are available. If in case you find something that is not available on our platform from this webinar, because there were few ETFs that are not available because they are very new and they're not listed on our platform due to our broker partner in the US. They need to screen the ETF and make it available for us to invest in. You can send us an email and we'll help get that on our platform.
Hi, Sandeep. Keeping in this, the recent drawdown in the Bitcoin, I think since I'm mentioning it once again, so Bitcoin should be, a very, very tiny part of your portfolio. Given that it has come down right now, I think it's a good chance to buy this dip, right? So there I have been seeing forecasts that it will reach um, about $2 lakh, right? Currently, it is only at 87, 89, $90,000 something. So I think it's a good time to buy some Bitcoin, so that you can, have a good buying point. So that. So asset allocation shouldn't be more than 5%. So 5% is good to have at least. Either.
These questions, we can just take the last question and then we can close for today. All right, since we're not having any questions, thank you all for joining. It's been a pleasure to host you. We're also having a webinar next month on the 6th with Shift All Cap. The topic is, one sec, uh, breaking down uh, breaking down borders, understanding and overcoming barriers to investing profitably in the US public market. If you're interested, you can join that webinar as well. It's happening on the 6th on 11 a.m. Thank you all for joining.